Hey traders. All right, let's quickly go over what's going on here today. The first thing that happened this morning was something we've been looking for. We wanted to see the bulls not, we want to see them not pick up liquidity, and then that would start in some elasticity and the bears would come in. Now remember that a nod requires the bulls to do nothing and then the bears to do something. So let's take a look at where we are in that. So the first thing that happened right here, you see decay pushes down. We don't get volume until here. So this is very unorganized, but this is bullish liquidity right there. And you can see not much happened over this time period, and tension-wise, not much happened. There was just a little, but then we were able to push down to about here. You could tell tension was moving in the opposite direction. This was a nod. Now, there is one problem with this nod currently, and that is there is no bearish position. So it caused a slide change. Maybe the bulls decided to empty some positions here or something. I don't know, but we still need to see the bears. So we did see velocity come down and give us another sample down here. And this is a really interesting situation because these bulls seem to have acted, but we still don't have any bears. So we have two bullish positions. One doesn't hit, which looks like a nod to me, and we're looking for the bears. Where are the bears? Well, the bears will be a sample from below, right here or right here. So essentially what I'm waiting for right now is see if the bears can get any work done. Now, this is an interesting situation because one of the philosophies is to run tension to zero. What's important about this philosophy is that that's where the bears' money comes from. When tension's really high, the bears make money running tension to zero. So look at tension. Think about what the bulls have sort of handed over to the bears here. They said, well, we're going to give you a nod. What is this, 3%? So these bears are going to have a hard time getting a position right here because as soon as they get it, we're going to have no tension to run. There's none. So the bears are basically getting a bad hand. They were not able to pick up something with awesome prices. They were not able to get into a great position and run tension to zero and make a little money. They're not going to get any money out of this. So it's sort of like a trick. You're being duped. The bulls have already, or whoever did it, extracted all the value in tension. And now the bears are going to come in and just run right into a zero test. So if you think about that, by the time the bears get a sample, we could be about here. If they sell it and they try to run with that, the very next thing will be 30-minute tension getting to a zero test. And that's going to be a bullish sample. The bulls are going to have a chance to come in and defend. So the bears are going to be between a rock and a hard place as soon as they get a chance to participate. This is the conundrum that the bears are currently in. So what happens in a lot of this type of a market is we get a spill off, then we get this wonderful emotional price pattern, which is first you have the shot up. This is the eager group. You have a pushback, and you move up. This is the confirmation group. Then you have a low 2, which shoves out this low right here. This is from memory, not from the market. Then we shoot up higher and we get the conservative. The conservative says, I only play once the market shows it's going to pay. And so that's the last group here is the one you get the dip to the stops, then the run. And after it shows it can break out and rally, then they play. And that means that the conservative group right now, we're already into that. We got these guys that the push down comes back and we're in the process of hitting the stops. Now the conservative group is going to be right about here. They're going to come in after the breakout because then they're like, oh, well, now I know it's going to pay, so then I'll play, but it already paid. So then this will be the next phase in that. And so that philosophy, which is, I don't know, pretty basic stuff, is going to line up with the bearish sample with velocity getting to about 0. And at that point, we'll be able to take a look at the bears. The bears are out of room. There's nowhere to run. So as soon as they show up, let's say we have price move up here and the bears decide to sell it and it starts to come down. They're going to run into this problem, and the bulls defend 30-minute tension, and it's going to go like that, and it's going to look like this into the close again. And the story here will be trick the bears into doing something they thought was totally wise, but it didn't actually make sense if you have a good grasp on structure. They're going to be stuck with their backs against the wall, which is what's been happening the last couple days. So when it comes to this kind of analysis, you have to remember that these huge moves down, like this one right here, if you're saying, well, why doesn't this analysis describe this huge move down? The answer is that's not within its scope. For me, there was just not enough data points to do anything this morning. And the slide down to me just, I'm just data point to data point. My objective is to figure out what's going on and take advantage of what can be known from this scope. So there may have been trading analysis that figured this sweep out. I don't know. But from where I'm sitting, it just looked like the bulls had a nod and the bears were very excited about that. But now the bears can't do anything about it because they're going to get stuck in a trap again. So we're about here. I expect it to move up, catch some conservatives, get a bearish sample, and then at that point, we need to see what the bears are going to do. Once we see what the bears are going to do, if they hit, then we are going to be leaning this into the bulls, the 30-minute sample, which is where I expect it to go, and then the bears are going to be stuck in a position. Either they let go and they try to buy out, so they'll start to try and buy out right here, right? We better cover because we don't, the bulls are coming in. And when they start buying out, we'll have another group buying in, which would be the bulls trying to defend 30-minute tension, which double people buying means it's a lot of demand. It's going to shoot things up pretty aggressively. And that means that wherever their stops are, which is probably going to be right about here above like this pivot or here. So I'm going to they're pretty close. Probably going to be sitting right about there. Now, I don't know because we haven't gotten there yet. I'm just saying this looks like we've got a roadmap to make this play out. And volatility tends to do that. A lot of times in highly volatile markets like this, where you have a big move, the roadmap gets pretty clear. And you're like, well, I think we see what's going on here and what makes a lot of sense and how we can trap in a bag holder and stuff like that. The reason is because without a move up, this is what clinches it. Without a move up to sample bears, there's no bears. So who on earth is it that's going to be pushing down? I know it's not people from yesterday. They got blown out. We saw that. See right there. We gapped up right through all their stops. We blew them out. They're gone. So it's not people from yesterday. It's not from today. So we still got to go find them. So I don't think this is the crater that it probably feels like. My assumption, and this is a general overall sense, is that there is, and I talked about this before, and I'm going to talk about it again, there's a fear growing. It's easy. People are terrified of inflation. They're terrified of it because that's what they heard from their grandpa and their grandma. Or maybe you're a little older and you remember some inflation in another country, or maybe even a little inflation here. You remember when things were cheaper. Well, inflation, strictly in my opinion, I'm going to say it's opinion because I'm not sure that anyone actually knows, is that this is a gold-backed thing. This is where you have a finite sum being measured by an infinite sum, or a mass sum, really, a currency. We don't have gold-backed. There's no... Printing more dollars doesn't make the dollar in your pocket move the way you think it does, because there's no finite sum in the middle being measured. So we're not diluting the currency the way gold-backed currencies work. So we're not going to be dealing with inflation the way, I think was it Reagan? You have to correct me if I'm wrong. I think it was Reagan who did the ban on gold, and that we basically don't have a gold-backed currency anymore. We're debt-backed, and debt's variable. So that means this is a relationship. It's topological. It's not a strict, I don't think we're going to get the inflation people are looking for. So what I think is that this fear right here is being modeled right here. That's what I think is happening. I think the market modeled the fear to generate this beautiful thing called liquidity. Liquidity is, I think the definition of liquidity is predictable, sellable losers. When you can predict a bunch of people activity, you can sell that. It's packageable. You can't sell a product that may or may not exist. People don't want that. What they want to say is, can I get liquidity from you? Yes, you can. Okay, great. It's a product. So can I rely on that? I'll pay for reliability. So what the market has to do is generate these reliable moments where they can get volume to sell. And what you need is losers, not winners. I mean, you don't want to predict winners, otherwise that's bad. So I think this move down modeled the fear of inflation. And I think you're going to hear a lot of your moms and dads and grandmas and grandpas calling you up and telling you about how they sold their shares because they're afraid of inflation, and they sold here, which is just looks to me like buying. It looks like buying. They drained the tension. There's no room for bears. They shot it down, and I'll bet you are seeing content on your social media platforms about how inflation is ruining your economy and that we need to be terrified of the crash that's coming. And I think it's being promoted by the machine sort of thing to create that sensitivity. A lot of people are really sensitive, so I think that's what this was. And I think they bought into it. And I think when the bears get their sample here, they're going to try and sell it, and it's going to end up in this problem, and then it's going to go like that. That's what I'm anticipating based on the market conditions. I don't know if I'm right. I also don't know how this will look. Maybe another leg down would trigger all the liquidity that they think. I don't know. I think there's a lot of people who are concerned. You should also have that in your head because you probably got a check from the government, unless you're not in America. But if you got a check from the US government, you should be sitting here going, isn't this going to cause inflation? So I think it's an easy thing to say that most people are aware of the inflation problem because they were very involved in accepting the money. It was a couple $1,000s for most people. So that's why I think that this fear is percolating across the trading community. People know that when you print money, you get inflation, but that's a gold-backed currency thing. I think that the debt is going to put money into the banks of foreign governments who are going to come back and try and pay Americans to do work for them, and it's going to drive prices down, and we get the whole other direction. Because I think that just makes more sense. I could be wrong. Tell me if I'm wrong. That's just when I think about it, that makes sense to me. So look at this. We're getting a little curl up here. So I think there was likely some bulls that picked up right here because I think that was the purpose of this whole thing. And I think we see that here. You see tension went up a little bit, but the structure here needs to be to trap bears out of their position. So we get up to that sample. We're almost there. We didn't get it. We did not cross over. There's some people who are sitting there at their computers going, oh, when I see the velocity of the McClellan go positive, I know it's going to go straight up. So when they buy, those buy orders come in to the broker who can sell them to the institutions who pay for order flow or liquidity. And so they become the fodder for an institution. But I don't think I don't really care about the small traders. I don't think about them as much. So I don't care what happens to them in the end. What I think matters is that institutions who try to sell a sample here are going to run into a structural wall, which is tension. So if they do consume the liquidity and try to hit, they don't have a whole lot of room to run. They'll, if we see a move down like this, down to the lows again, I think tension would probably hit zero somewhere about here, and then the bulls will go, oh no, we want this, and they'll pick it up and shoot it back up. And so you have the capital problem, which is it's expensive to drive a market if you don't have a sucker. It's even more expensive if you drive it into the counterparty who folds you over and you need to run really quick. So this can get spendy. So that's where we are. We're right on the edge there. You see, we got one, so we need to see the advanced decline hit like 136 right now. Probably more like 146 to get positive velocity number. And then after that, we can see what the bears intend to do. When we see the bears intend to do, we're going to have a look at both sides. We've got a framework here to deal with. We should be able to see what makes the most sense. I think it's pretty sensible what's been going on. I think that, I don't know, a V shape hasn't quite worked out, but we did get the emotional pattern, which is, the eager people, the conservative people, you hit the stops, and now the market's trying to get a handle on, the eager people, the confirmation people, and then the conservative people, which are, I refuse to play until it pays. That's the deal. So we just have to wait. The next thing to watch for on your charts is this. You look for the sample. Look for the trapped orders like red bar, something red. Watch for the volume to cool off. And then watch for, so 1, sample, 2, it's going to be the volume. And then 3, you're looking for tension to move. That's going to be a big deal because we need to see that it's institutions trying to pump tension down. If it's institutions, then we got a bigger player who's making a mistake. And that's great because that means that the bulls can come in and they could take those guys out, and it pays better. It just pays better to have bigger fish trapped in your net. So that's what we're looking for. After that, the next thing to watch, so 4 would be 4 is getting tension to 0. 5, we'll be watching for some volume showing up there when tension gets to 0. And then at that moment, we'll see if the bulls are going to defend their supremacy. They have had control of the market, enjoyed it, lots of fun at the bears' expense. Now we want to see, so 5 would be the trapped orders, and then 6 would be some sort of price response, like doop, out of that. And then 7, tension curls up and we see the impact. At this point right here, we have all those things line up, and at 7, we see the bulls defend tension. We know what's going to happen. It's clear how it will play out from there. We have clarity. We can see the bulls are defending. The bears are out of room. They didn't get a good run. They can't take up, options to hedge their position because they didn't get enough. Oh, no, I don't know why that's all my OBS settings got all out of whack. Can't switch back over to that monitor for some reason. Anyway, so that's where we're at right now. If the bulls don't defend 30-minute tension, meaning we see, so we see my markings are on the other monitor. If at that point where we move down and we have the volume show up and the bulls do nothing there, right there, expect a big, huge, fat, nasty algorithm. That's what you expect. Because if the bears realize that the bulls are not going to defend, okay, at that point, then your rule of thumb is, so if they realize they can get tension under 0, their job is to get tension as far under 0 as possible. You have got to do that because then that puts you in a good position tomorrow. So if they don't, the rule is get advantage. This is the rule here. If the bulls do nothing at the 0 test, the bears are going to get advantage. They're going to run algorithms. They're going to start calling news. They're going to say, everybody pile in, pile. We got to get this under 0 as best we can. That way tomorrow it starts under 0. And we have some of the probabilities in our favor and can potentially take control of the market. So this is the thing if these bulls do nothing. Now, I don't know why the bulls would do nothing. They've been in control of the market for like almost a week or more than a week where they just clearly buy in and take out bears just over and over. So right here, they should come in. We have a track record, immediate track record that they are buying. So I anticipate them to continue to do so and to defend 30-minute tension. That's my expectation. And I'll continue to expect that until they break that expectation down. You just need to be aware that if the bulls do nothing here, the bear's mentality is run a huge fat algorithm, just as big as we can muster. It'll be a bit of a scramble. So now you know the other side of the position. The bears do have a little chance there, but it's a dependency thing, and I think it's terribly difficult to do. Okay, there's our sample. And I don't like this. You see how this finished like right on the sample? I don't like that. I like the volume to be a response to the sample, not right before the sample. Like, the thing here is we know that people like to respond to things. And so this doesn't look like response to me. That looks like it was filling already beforehand. We want to see people go, oh my goodness, it's positive, and then react, and then we get buyers coming in trying to buy. It's a reaction thing. So I don't like that. I don't like that there was volume right on it. It was just right there. So I wouldn't do anything. If I was bearish, I won't do anything with this, because the volume didn't line up right the way that I like it, which is you see the signal, then you get the volume, not they happen simultaneously. I'll wait. I'll just input this as data points, not actionable stuff. It's just not my favorite thing. So, at the end of the day, yeah, probably I'll accept it as liquidity, but the way that it's set up is not something I participate with at all, because it was too, this way. So then after we get this to lean down, let's see what's going to happen. I don't particularly like the way this is set up. I think we should move back up here, get a little bit more volume, and then the bears. I think that's what we should do. We had a little messiness like that this morning. You see it came down and it took a while before the response showed up. So we could see this hit there, and then it just takes a little while before the response shows up. Well, I don't really need to sit here. I mean, we've gone through what's going to happen, how it should work. You can go, yeah? In just a minute, I will, yeah. Okay, so I've shown you what to anticipate, what I see going on here, and the framework. These bears are getting put into a position where they're not going to have anywhere to go. Yeah. Okay. You can flip over to the Zoom charts. You can watch it on the Zoom charts, roll out, and do with it what you will. I think that's what's going on right now. I will pop back in later today because this is an interesting market. It's going to take a little while to develop, so otherwise it's just going to be a video of me sitting here watching. I'll pop back in later today and do a stream about how it's playing out. Probably maybe a little after we get tension to 0 is when I'll pop back in and walk through what's going on. So thanks for showing up. Good luck, guys.